Hello and welcome, dear dividend investors. I just created a poll about 2 hours ago in the Facebook group Dividend Growth Investing, and I asked you which stocks to compare. You know the common question: I have some money, should I buy stock A or maybe stock B? And you decided to compare Apple or Microsoft before JP Morgan or Bank of America. And we are doing so now right away. My name is Thorsten, and we will now make a quick and dirty analysis, but still well-founded. I hope so. And I also hope that this helps you to make the right decision. So I turned off the screen capture so you can focus not on me, but on the stocks. I created a little watch list. Both stocks are already included here. I am long on both stocks, by the way, but I own more Microsoft shares or higher market capitalization in Microsoft shares than in Apple stocks. Okay, first we do a little comparison by the matrix, then we take a look at valuation, because you already might know that tech stocks are partly crazily valued right now, and valuation also is very important if you want to buy a stock. And then I will tell you which company is more solidly or is more stable or is more well structured, more safe from an earnings point of view. Okay, so let's start with both stocks. So market capitalization crazily high of both stocks. Apple already passed $2 billion. You still remember the race for $1 billion not long ago. We already passed $2 billion, at least Apple did. Microsoft 1.6 billion to behemoth there. Dividend yield rather low, with Microsoft touching 1%, Apple even lower, 0.7% about. Payout ratios, both dividends are safe. They are both reliable dividend payers. Payout ratio of Microsoft a little bit higher with 35%, regardless if you base the payout ratio on free cash flow or on reported earnings. Apple between 20 to 25%, depends on which metric you calculate, but also in the greens. And here are some more metrics. Microsoft paying dividends for a longer time already, increases dividends since 16 years, and dividend growth, the annual dividend growth is very similar, about 9% for both stocks. The dividend stability, the stability matrix, just remember it's a metric ranging from -1 to +1, +1 being the best, the ultimate value, reached very rarely, sometimes for dividends, but I think never for earnings or operating cash flows. Still, the values here are very, very high for each metric. Microsoft is 0.86 earnings stability, which is still very good, and we will see why it's a little bit lower than for Apple. I think this has to do with some write-offs to get rid of the heritage of the Balmer area regarding the Windows Phone. We will see that just in a moment in the charts below, but we are not that far right now. So earnings, cash flows, revenues, super stable, and the growth is about the same if you look at the current business year. At least if you look into the last years or at the last years, then it's even, or it's not easy to say, because compound annual growth rates behave differently depending on the period you look at. If we look at the revenues, then we see that we have the same picture. It's also very unevenly distributed here. That's the problem with compound annual growth rates. They only take 2 data points into account. We will see that later in the charts. But overall, Still reliable growth of earnings, cash flows, revenues. So really very solid companies, no problems with debts. And here you can see the capital gains in the long run, and this is where Apple shines. If you compare it with Microsoft is not bad, but Apple is even better. So for example, looking 1 year back, then Apple doubled its value, Microsoft only in parentheses 55% plus, and the same holds true also if you look a little bit or go more far into the past. Just if you compare 5 years, then Microsoft performed better than Apple. I think this is also due to the end of the Balmer heritage. Let's take a deeper look into Apple right now. Here we see the growth of the earnings, of the operating cash flow, free cash flow, of the dividends. Don't be confused about the estimates of the last year here. If we go too far into the future, estimates become rather unreliable. Just skip this one in your thoughts. Metrics don't take into account this one either way. What's very important is the valuation of the stock. Just look at the stock price here, what happened, and then you see that the stock price really went up. This is before the Corona crash, $80. This is right now $160, and it already topped 100, nearly topped $130, the Apple stock. That's really crazy. And since the Corona crash, Apple more than doubled. Wow, that's really much. And you see that starting from the iPhone somewhere in 2006 till today, annual yield was more than 30%, and the overall yield is close to 4,500%. So if you invested $1,000, your return is $44,500, $1,700 dividends included. So that's not bad, but that's the past. That's the problem. Today we are here. Here as the red dot right now, and now we have to decide if the stock is rather a buy or if we should better wait for the stock to come back. And how do we do that? We calculate the fair values, and I'm just doing it right now based on this period of time, and then get rid of all that, and then let's see what we find out here. And these are the fair values. Okay, and then you see that the stock is really aggressively priced right now. We see phases of undervaluation in sometimes the stock was overvalued. Here Apple started paying dividends back in 2012, and we had phases where the stock seemed to be undervalued. For example, between 2012 till end of or second half of 2014, once more in 2016. But right now the stock is very aggressively priced right now. It's far away from the fair values we just calculated, ranging from about 60 to 65, depending on dividends, even only $50. But I think that you won't consider the fair value dividends because we don't buy Apple based on dividends, and then we still have here these fair values. And the problem a little bit is that analysts estimate that earnings, cash flows still increase, but even then, at least for the year 2022, let's get rid of the last year here. No, this one is okay, this one is still okay. Then the fair value would range between 70 and about $8, which is still far or clearly above $160 right now. Short-term correction potential, if you want. So is about 33%. So the stock is expensive. Is expensive right now. Let's see what Microsoft has in store. Let's check the fundamentals, and here you see in 2015, I think these are the write-offs, and this explains why we have lower earnings stability than compared to Apple here, but still very solid growth anyway. And I'm afraid that Microsoft is also aggressively valued. Here you see the differences between reported earnings. Here there are these write-offs, and adjusted earnings is this brown area. So if we do valuation of the stock, we do it for the adjusted earnings only, not for the reported earnings. Also for the operating cash flows and for the dividends, I think as well. Here are special dividends which were paid. If we calculate fair value for Microsoft, we take the after Balmer area, maybe starting in 2015 here, and to get representative multiples, and then we take this one, and this one, and then here you see that Microsoft also, the stock gained after the Corona crash 55%, and Apple even doubled, as we have seen, but still the stock Microsoft seems to be aggressively valued. So basically the same as for Apple, and we are here right now. And if we look at the potential for a correction, then we see 37%. I don't recall right now what it was for Apple, but it was something like that, or even a little bit higher, if I remember. Okay, so basically the same picture for both stocks, because the fair value won't match the current stock price, also not as far away as in 2023 here. This means that you should be careful if you think about a one-time investment in either of these stocks, because they are aggressively priced. Of course, you can always argue with that these multiples are too low. Then just adjust these multiples. This is the price earnings based on adjusted earnings. And you can go make 25. It's not enough. 30 is not enough. 32. It should be 32, and then you can think if this is a fair valuation or not, and based on operating cash flow, it should be around 25 or 26 even. Let's add it here, 26, to get a fair value here. It's up to you to decide if you think that Microsoft is worth that much. Here you see the fair values back in time, then if you make kind of back testing. So both stocks are rather aggressively valued. And I promised you to give you my point of view still, which is the better company, which company is more solidly founded or is more safe from an economic point of view. And this depends on how they earn money. Microsoft has its business divided into 3 segments: productivity and business processes. Whereas, for example, the Office suite, so excellent, all this stuff. The cloud segment with Azure, and personal computing, where resides, for example, the Windows operating system. And if you look at the numbers, then they are very evenly distributed. So the sales and the operating income is very evenly distributed between these 3 segments, which are a little bit interwoven, but still more independent than the segments of Apple, which you will see, or which I will tell you very soon, because Apple earns still about 55% of its revenue. That was the case in 2019 with the iPhone, with iPhone sales, and all the other segments are still minor. Services is a very important segment and it's growing well, but it still accounts for only 18%, or still accounted for only 18% back in 2019. And the services segment, of course, depends on the iPhone. If the iPhone would be on demise, then the services and other segments would be on demise as well. That's the problem, which is more of a problem than for Microsoft. Okay, we have the Microsoft technology stack, which is also there's also an interdependency, but it's not as strict or as for Apple with the iPhone. The iPhone, the importance of the iPhone, the revenues from the iPhone segment are declining, and this is good because the other segments get more important, but you can still call Apple the iPhone company if you want so. And to me, Apple is more vulnerable because of this than Microsoft. It's also, to me, less believable that people will get rid of the Windows operating system and all go to, I don't know, Linux, or use an Mac, because that never happened, and people are just used to that, and it's not more expensive. Okay, it costs a little bit more, but not so much. And Apple, on the other hand, is a luxury product somehow. Okay, I'm maybe a little bit biased. I own some Apple shares, but I don't know any Apple hardware, and it's not, to me, I just never tried it out, and I don't know why to spend so much money for this Apple stuff. But that's a personal thing, but personal opinions always come somehow into play. Either it's you are just, sometimes you're aware and sometimes you aren't. Okay, so if I had to choose a stock to invest right now, I'd choose Microsoft. But if I had some time and I didn't need to invest right now, then I'd wait a little bit for the stocks to come back, or invest in steps, not everything at once, but from time to time. And then if a correction comes, then you can buy with the remaining money for a cheaper price. Okay, that was my opinion. If you have another opinion, then just write it down in the comments. Thanks for watching. See you next time. Ciao.